Good morning, ladies and gentlemen. I'll be testing this. It never really works how it's supposed to, but hopefully it does. Good morning and welcome to this panel on harnessing the power of renewable energy in Africa. My name is Rivhatshiny, but Riva for short, so I'll be referring to myself as Riva, same thing, as of this point. And with me, I have a great panelist, and they'll introduce themselves a little later on today. So I think harnessing the power of renewable energy is important to achieve climate goals. It's important, as we've heard from the previous speaker, to address the energy access gap that exists in Africa, but it's also important to achieve sustainable socio-economic development on the continent. So that's the background. And with me, I have a great panel. I am the thorn amongst the roses. I am, what? The rose amongst the thorn. But I have a great panel with me, and I would give them the chance to introduce themselves briefly, and then we can kick off. Yeah.
Sure, happy to start. Hi, I'm William Attwell from Sustainable Fitch, which is the ESG business of the Fitch Group. So I'm research director there, focusing on climate, but assessing developments, trends in the sustainable finance markets, as well as leading on projects covering decarbonisation initiatives and other developments in the clean energy space. So very pleased to be joining you today.
Good morning, I'm Zohrab Mawani with Africa Energy Development Corporation. It's a company that develops primarily solar PV, but also other renewables in East Africa, and we're expanding across sub-Saharan Africa. But we're the original developer of Malindi Solar, which is a 52 megawatt site in Kenya, and we work with strategic partners for equity, so we're a minority shareholder in the project still, and Global Ec is our partner there. We're developing many other projects. Thanks.
I'm Aryeh Green. I'm the Chief Strategy Officer for Gigawatt Global, and virtually everything that you just said, I could just repeat, but with slightly different nuances. But we're a platform for renewable energy focused on sub-Saharan Africa. We build solar and now wind fields, pipeline of over a dozen projects, basically a gigawatt of projects under development throughout sub-Saharan Africa. Gigawatt Global brought the utility scale, commercial scale solar industry to Africa, to sub-Saharan Africa for the first time, with the first utility scale solar field in sub-Saharan Africa in Rwanda in 2014. We built a field more recently in Burundi, which is already providing over 10% of that country's generating capacity. And we, as I said, have a pipeline of projects throughout sub-Saharan Africa, and I hope to work with you in partnership to bring more renewable energy to the poorest communities on the planet.
Thank you. Good morning. My name is Christoph. I work as a senior advisor at GET.invest. GET.invest is a technical assistance program funded by the European Union, the German government, Dutch government, Swedish, Austrian government. Soon to join will be the Norwegian government. Our target is to support projects on the way of development, so providing assistance, making them bankable, getting them investment ready, and in the second step, introducing them to financiers who are interested. That could be loan, that could be equity, that could be grants. Currently, we are advising about 190 projects. Altogether, we have advised more than 400 projects. And we have come to, as of now, more than 80 financial closes where we were able to support our clients on the way of development, so helping them to develop their business, introduce them to financiers, and come to a financial close to continue their business.
Awesome. And as introduced by the main moderator, I work for Norfund, which is a Norwegian DFI, and we have deployed close to $2.5 billion, half of which was to renewable energy. I think renewable energy is our biggest sector allocation. We have worked on major projects on the African continent, including Lake Turkana, and of recent, the largest PV plus BESS storage in Southern Africa. So really, this topic is close to us as Norfund and close to me personally as an African. So to kick off, I think we've started with why this is important, but in order to achieve the exponential growth that we're speaking about, there are a couple of multifaceted players and strategies that need to be deployed. And some of these need to be quite bespoke and need to be tailored to the country, to the region, and at times to the local and community context. And together with my panel, we'll explore some of that. So to start off with, one of the key players or enablers that we think is key to achieve exponential growth is government and regulatory framework. So to kick off, maybe William, maybe if you could share where you think policy is working right on the continent, what you think policymakers should be doing more of, less of, etc. I think we spend a lot of time blaming policymakers, but to date, there's 59 gigawatts of renewable energy currently installed on the continent. So there are some things that policymakers are getting right, and I think we should highlight that so that we can also continue doing some of that. William, do you want to touch on that a little bit?
Sure. I thought I might begin actually by just zooming out to the global level to just provide a picture of why we're seeing this exponential growth to the title of the panel in renewable energy development and investment. I suppose the challenge is that exponential growth is happening at a global level, but it's not necessarily happening at an African level. That's sort of the challenge, and we need to make it happen at an African level and get the financing in place to make that happen. But what's going on at a global level? Well, the sort of big explosion, I suppose, is the U.S. Inflation Reduction Act and the massive subsidies that it's pumping into clean energy and a range of other things too in the United States. So that's an opportunity and also a threat. The one because it potentially sucks all the investment from other jurisdictions to the United States, where of course clean energy projects are taking off at an enormous scale. We're seeing a response from other big jurisdictions, EU countries, China as well. So a big, I suppose, a subsidy race to try and attract and reduce the costs of renewable energy in those major jurisdictions. So that's a bit of a challenge for Africa, actually, and really, I suppose, underlines the need to be competitive and attractive and provide that enabling environment for investment. On the flip side, there is an opportunity component here, though, as we see in the EU's response with the Green Deal, EU Green Deal, and some of the components of that, the Net Zero Industry Act in Europe, the Critical Raw Materials Act. Those all include components of trying to diversify their sources of those critical minerals that are needed for renewable energy projects and other clean technologies, diversifying those sources from being dependent on China for those resources. So that potentially creates a big opportunity for African markets that are providers of some of those critical raw materials, like rare earth minerals and so on. So there's an opportunity, not necessarily on the scaling up of energy capacity locally, but certainly an opportunity in terms of developing those mineral industries, which could have benefits in terms of generating foreign exchange revenue and other opportunities as well in terms of industrialization. So in terms of what's happening in the domestic environment, we could have a whole conference just about sort of energy policy across Africa, and I think the previous panel did delve into some of that in some detail. I suppose from my perspective, we work very closely with investors in the sustainable finance space, in green finance, and I think one of the sort of sparks of hope that we see in the policy environment here is where we see developments across different African jurisdictions in terms of being able to attract some of that green finance. So a particular example, I think, is South Africa, which has been a pathfinder in this space, producing the region's first green finance taxonomy, which really is a way of classifying green activities and projects, for instance, renewable energy projects. And that provides some guardrails and some safeguards for investors to know that what they're investing in terms of bonds issued by companies or entities involved in these clean energy projects, that they know that financing is being directed towards those green activities. So the fact that we have a green finance taxonomy in South Africa, that's certainly good news. And I know a number of other jurisdictions, Kenya, Morocco, for instance, developing green bond guidelines and similar guidelines and reference points which are draw on the ICMA's green bond principles. So I think that's all quite good news and positive developments in terms of attracting green finance to these sustainable energy initiatives. So I'll start off with that, and I'm sure we have plenty more to expand on. Yeah.
No, thank you for that. And I think what you've touched on really is important in the South African context, that as government enacts policy and regulatory framework, what they do is they create a more supportive environment, and the private sector knows what the rules are, what the rules of engagement are, and really that's what the private sector and other players who, as I mentioned, will be key to this exponential growth. That's what they need to understand. What are the rules of engagement? And that's what policy and regulatory framework does. But moving on to you, Aryeh and Zohrab, you are developers. What has been your experience with regulatory frameworks, particularly maybe outside of the South African context or elsewhere on the continent? What has worked well for you, and what has been some of your stumbling blocks?
Can I start? Yeah.
Yes.
Thanks, Riva. So, and also expanding on what William talked about here, it's interesting because I've been in the sector for just a bit over 20 years. And in the first 10 years, I'm based in Toronto, but born in Nairobi. So the first 10 years of my career, I developed 1.6 gigawatts of wind and solar projects in Canada and the US that are operational. The last 10 years, I focused on Africa, and I developed 52 megawatts in Kenya. So there's a real disparity there, and I think it's policy related, but it's also execution. So there's policy in Kenya and other African countries. There's definitely supportive policy as a framework to allow private investors and developers to come in and develop. But the execution and implementation is a challenge. So taking 10 years for me to develop the Malindi Solar Project, we started in 2013. It's now 2023. We did achieve COD in January of 2022. But 9 years to develop a solar project, 52 megawatt solar project, it's really a Sisyphus kind of pushing a boulder up a mountain kind of effort as a small developer. So there's a disparity there, and so I'm caught between two continents because of the policy. The IRA in the US, I'm involved in another 1.7 gigawatts of solar projects over there developing, while I'm doing a few hundred megawatts in East Africa. So I'm torn between two continents, and it's policy related, but implementation and execution is the big challenge.
Wow. I mean, we will definitely talk after this, because there may be forget about on the investing side, a real strategic partnership here between two developers in Africa who are experiencing virtually the same. It took us 7 years to develop our project in Burundi. Now, I think everybody here, because there's an interest in Africa, understands Burundi is one of the poorest nations on the planet. Forgive me for saying so, virtually dysfunctional country. Our first field in Rwanda was, for everything else that might be said about Rwanda, Rwanda is a relatively stable economic and business and political environment to work in, and we had the support of the president for our project. In Burundi, the experience was slightly different. But to kind of take off to support and agree with everything you said, and to move one step further, some specific examples. There are countries that we're working in, and I'm not going to mention the specific countries, but we're actively developing projects in Zambia, Mozambique, Ethiopia, South Sudan, another relatively dysfunctional, challenging market, in Nigeria, in Liberia, in the Comoros, in Uganda, and therefore, without specifically focusing on any one country, every country provides and presents challenges which are not unique to the country, but I would say unique to the continent, unfortunately. So for instance, you sign a PPA, a power purchase agreement, with a certain feed-in tariff, and as you're reaching financial close with your financial partners, and by the way, full disclosure, we've worked with GET.invest, we've worked with Norfund to finance our projects, and FMO, you mentioned Globalec, our partner in Nigeria, so we're kind of all in this together. And the government of one of our projects came and wanted to reduce the feed-in tariff by a half. Why? Not because that was justified by the financial model for the project. It was because in a neighboring country, the feed-in tariff was less. Without taking into account, obviously, the differences in cost of operations in this particular country, where our field was literally 8 hours up a dirt road we had to pave roads to bring the equipment to build the field, and that's just one minor element of another sort of challenge. But in terms of the actual financial model, the governments, because that's your focus of your first question, Riva, the government's policy making wasn't taking into account the reality on the ground, but rather either rivalries or even social media or just media campaigns suggesting, why should we be paying more for our energy than our neighboring country is, without taking into account, obviously, all the different elements. And that's just one example of policy. And let's face it, forgetting about corruption for a second, in general, the issue of signing an agreement and keeping to an agreement is not necessarily part of the business climate in some of the markets that we're active in. So that's another issue. And the third issue, of course, which is less policy than, again, issue of reality on the ground, is the instability of some of the governments, where you have a 2-3 year relationship with the energy minister or the finance minister or the prime minister or the president of a country, and just as you're coming to financial close with your World Bank, Norfund, financial partners, everything changes and prior agreements aren't necessarily honored. So there's a lot to learn, now I could say a lot of positive things too, by the way, but your question was on the policy. I'll stop there. There's more anecdotes that one could share, but it's a difficult market to work in. And when we get to that conversation about how to encourage, we call this harnessing the exponential. I would like to focus on encouraging and enabling the exponential growth of renewable energy in sub-Saharan Africa, which is possible, but that's on the positive side, one of the things that we should talk about, what governments can do and what the world community can do to help encourage companies like ours to be successful and to spend less than 7 or 9 years in building a small field that has a real impact on the community.
Okay, so some things that the governments are doing right, and some things where they're falling short a little bit, and where they're falling short, it probably, from what I've heard, sounds more, you can't take a blanket approach. You need to be very tailored. A tariff is, proposed based on certain inputs that are quite specific to a country. So maybe some education on that part, on how that works, etc. But I think a more balanced view would be there's a lot to do, but the governments are at least accommodating, and there are some projects getting off the ground. And another enabler outside of policy, once you've got the policy and you've got the feed-in tariff, and you know what the rules are and how to play, you need to get the financing. Now, this is a hot topic. I think, since yesterday we've been discussing this, and the last speaker also spoke about it. There's not enough financing to finance all the projects that are earmarked or that have been in the pipeline. And so the importance of financing comes into it. And when you think about financing, there are phases of a project. There's before you get to financial close, when you're still getting your permits, etc. And that seems to be where there is the least amount of financing. Christopher, I don't know if you want to touch on that and what you guys have seen and the things that you guys are doing around some of that.
Yes, I would like to say something about that. Maybe later on I would like to add to the stories of, let's say, frustration with the project development, because there's a silver lining to that.
Yes.
I can maybe do that later, so that adds. But first of all, to the financing, I'm not sure if I fully agree that there's not enough financing. The question is of bringing them together, so the project to the financier, which match each other's expectations. This is a far more challenging thing. So. From the GET.invest side, our approach is, since also we are a government-funded program, we have to be very neutral and look into every kind of financier, into every kind of project with the same eyes, the same approach. So from our perspective, it's time-consuming to first understand the project structure itself, to start a communication with the project developer, the owners, also include all kinds of stakeholders. But once you've done that, you can see that on our website, it's publicly available. We have a funding database of more than 140 different funding instruments from different providers. These are commercial banks, DFIs, funds. We have another 140 more, which we do not show publicly because these entities would prefer to keep a low profile, mostly related to philanthropy or to family offices. So the challenging part is really to advise projects in a way that they find the right financier And not always do project developers know this in the beginning. They come to us with, we need 5 million for CapEx investment. How can we get it? But they don't know the details. Maybe they've read something, oh, commercial banks do a program on this, or IFC, or the DFIs from Europe do that, but they don't know the details. So it's really, the challenging part is to understand the project in detail, to have a communication with all parties involved, and to continue this communication from the time we start the advisory service until we come to a financial close. And even after that, we can provide services to restructure loan and debt, to even grow your company by merger and acquisition. So as I'm saying, it's more, the challenge is to bring the two parties together, the project itself and the financier, and to make a match. And we have developed tools and competencies over the past few years to make that happen at a very high success rate. As I said, out of 400 projects altogether in 6 years, we have come now to more than 80 financial closes, which is quite a good ratio. And we will like to continue on that. So I would suggest that understanding better the project details and also the expectations of the financiers. Very often they are looked at, yeah, they are the banks, they have the money, why should I care about them? Yeah. But they also have goals set, they also have targets to reach, and they have eligibility criteria, limitations, restrictions. So understanding both sides of the story makes it a lot easier to come to a conclusion.
Okay. Yeah. Okay. So in the infrastructure financing, we call the pre-dev financing the cradle of death. It's where projects go to die slowly. So I think, Christoph, what you're proposing there is resuscitation for all these projects. So I would believe that Zohrab and Aryeh, you would maybe benefit from some of those projects. But maybe speaking to how your experience has been as developers. I mean, I had 9 years, I had 7 years to develop a project. I don't think all of that was regulatory related. What have you found to be some of the other financing challenges, and also some of the solutions that you could share with the audience here and other developers who might be like-minded and want to see exponential growth on the continent?
Well, first of all, I agree with what Christoph said. Not to argue with you, but there are trillions of dollars mandated to invest in our sorts of renewable energy projects, and particularly in the world's most vulnerable communities, like in sub-Saharan Africa. So project finance, I don't believe, actually is the challenge. I know we as a company don't have a challenge. Every funder that we go to says, oh, we want to get into your project. South Sudan, Nigeria, Kenya, Ethiopia, well, now that's a bit on hold, but Zambia, Mozambique. The project finance isn't the issue. And there are wonderful groups between GET.invest, Norfund, Swedfund, FinFund, FMO, the Development Finance Corporation of the States, all of whom are our partners in our current and our future projects. But you've identified, I think, kind of subtly, it's a nice invitation for me to focus on this, and I'm sure we'll agree on this. Those 7 or 9 or 5 years that it takes to bring a project to financial close in the beginning of construction, who funds that? Who puts project developers on planes? Who pays for our local teams? Who pays for the legal fees to help negotiate a PPA? Who pays for the environmental and social impact studies? You know, the grid studies, all of the elements that as a developer we need to bring the project to a funder to say, this project is ready to be funded. It'll be $20 million, we'll build it in 18 months, and it'll be, a great success. All of that lead up, almost every funding institution in the world, private banks, private equity firms, government development banks, etc., say, well, no, we don't fund developers. We only fund projects. And 2 years ago, I gave a presentation here, which I literally, I think was a bit more aggressive than I needed to be, or assertive and I named names of...
Let's not do that.
No, I can be more gentle today because I think the mood has changed. Your question from Norfund's perspective has changed. There's an awareness of this. My presentation last time was renewable energy in Africa moving from talk to action, because everybody was talking about funding developers like ours, but nobody was willing to actually do it. So in terms of the bottom line, I would say there are two issues or 2 recommendations that I can make. Number one is not the commercial banks. Commercial banks have their need, they have their IRR that they're looking for. I have no claims. But development banks, or impact investment funds or foundations who are trying to do program-related investments and take their equity and putting into these kind of things, they need to lower their expectations. Now, we all know, those of us who are involved in impact investing, that you don't have to sacrifice returns in order to have impact, in order to help African economic development or promote renewable energy. But at the stage where there's a bit more risk to take, at the pre-development stage, where you're not investing in a project which is covered by political risk insurance or the international guarantees that the World Bank or others provide, at the pre-development stage, to put in $1 million or 2 or 5 or 10 even into a company like ours, which is developing a series of projects, which then can bring those projects back to you as a funder and say, now invest in this project, you can have the right of first refusal. That's where we're talking today. And we're talking with foundations about perhaps venture philanthropy, meaning grants to a company like ours to enable us to build out the projects in our pipeline, to be more accelerating the development. We're talking to impact investment funds and foundations about equity investments from their endowments. But basically what we're talking about is not randomly putting money into risky business. We're talking about you doing your due diligence and recognizing that if these companies like ours have a proven record of being able to build in Africa solar fields successfully, then they need support which may not be at the same return level or risk level as investing in a project, but it's going to enable those projects to come to you faster and more of them. And I think that's a very important and specific issue that from the management, the executive level of these funds, development banks, and foundations needs to trickle down to the financial analysts who give the recommendation of whether to invest in a company, who come from the banking sector, come from Wall Street, and their attitude is, well, you know, if we want to support renewable energy, so let's build in the States, because it's a terrific opportunity, and you don't have any of the risks that are involved in the country risks in Africa. And that message needs to get down to the decision-making level of this is our mandate, this is what we want to focus on. We want to help these developers to build the projects that we want to eventually invest in.
Yeah.
Well said, Aryeh. I agree 100%. And I'm glad they invited you back to speak after your aggressive. Yeah, so I agree, and I think that just the only thing I would add is, you know, for finance to get involved early like this would also provide more discipline in the project development process. So we work with a lot of local developers in Kenya, but in other countries. And part of what we can bring is a little bit of investment. We're a small developer, so we bring a little bit of investment, but we also bring discipline to the development process. So, you know, for example, a recent project we've worked on is 55 megawatt solar project, but its interconnection proposed by the original developer is 30 kilometers from the transmission line, the point of interconnection. That doesn't make economic sense. So we've come in and added a bit more rigor and improved the project. And I think getting finance involved or developers that are familiar with how to finance a project early is very helpful in getting those projects done. And then at the end of the day, we'll have more projects, more viable projects to choose from, and more execution and growth of renewable energy in Africa.
Agreed.
And I mean, I think what I'm hearing from all three of you is that there is enough financing. But an interesting point that you started off with, William, was around, you know, the incentives that the US and other EU countries are introducing that might, you know, attract investment away from Africa. I mean, what do you think we need to think about as we think about incentives, the role of government? I mean, I think their role has been status quo. I don't think it has changed in the last decade since they, you know, many of them deployed and thought about what does a renewable energy policy look like. But the landscape and the competitive environment in which they find themselves has changed significantly. What are some of your thoughts on this?
Yeah, I absolutely agree. I mean, the reality, the global reality that they're facing is completely different to just a few years ago. If anything, you know, we'd expect it to become more difficult to finance those fossil fuel intensive industries in the coming years. And certainly some of the key players that will be, you know, critical for early stage financing, de-risking projects, they're very much focused on cleaner, greener technologies and financing renewable energy. So, if you look at the Asian Infrastructure Investment Bank, they're going to triple their climate-related financing to 2030. The World Bank is doing a big pivot towards renewable energy. So all of these really important players are very much focused on this, in addition to, of course, the sort of fundamental economics of the renewable energy space changing in its favor. So I think the opportunity is definitely there. There are obviously practical challenges on the ground, and it's telling that where you see renewable energy actually growing in terms of sort of gigawatts of capacity at a kind of aggregate level, according to my colleagues at Fitch Solutions BMI, it's really just 4 countries that account for, I think, 80% of the additional capacity that's going to be added to the 2030s. So it's Kenya, Ethiopia, South Africa, and Cote d'Ivoire, accounting for almost all of that capacity. So it really suggests that in smaller countries like Burundi, but others, there's obviously very serious challenges in terms of just making projects happen. So I think it's it would be a pity if those markets then lose out on this big global shift that we're seeing, which is carrying along with it massive financing, massive incentives, and huge opportunities as well. And I suppose I'd say, on the back of that, a lot of interest from investors. Investors would like to back these projects if the numbers stack up. I think from a sustainable finance and impact investing perspective, these are projects that are very attractive, not just because you're talking about decarbonisation, which is a big focus, of course, for investors investing in clean energy in Europe and other developed markets, but you ticking off a number of other SDGs along the way. You are, in some cases, installing the electricity generation capacity for the first time in many locations. So you're contributing to socioeconomic development and economic opportunities. So you're ticking off the S and the E from the ESG by backing these kinds of projects potentially. So I think there's a lot of interest and a lot of momentum, but of course it's about getting things lined up on the ground, and individual countries, especially outside of those main 4, I think there's a big challenge still.
Can I just add one element that I think people may not be familiar with, especially those of us who are coming from a Western country? We talk about subsidies. The issue of distribution of electricity in Africa, and I'm not talking about the distribution of the actual electrons, I mean so diesel, coal, oil, wood, kerosene are the primary sources of energy in many of these rural economies. How do you get those places? It's incredibly expensive. It's expensive to buy oil and diesel. It's expensive to have it delivered to the country, let alone to the rural areas where most of the population lives. And what does that mean? That means that renewable energy in the midterm, I'm not talking about 20 years from now, I'm talking about once a field is built, within 3 to 5 years, the country, which means the people, if the country's managed appropriately, benefit from reduced energy costs. Yeah. Which also means that the renewable energy plants that are being built, wind, hydro, and solar, actually can be profitable, because aside from the negative comment I made about a renegotiation of the feed-in tariffs can be high enough to make these projects actually financially feasible for investors to get what are, to a certain extent, risk-adjusted returns, 12, 14, mid-teen returns over a 20, 25-year PPA for a renewable energy project, which means that not only are the people benefiting from cheaper electricity, the investors can benefit, and you don't need a subsidy for that. And that's an important element that a lot of, I think, the investment community that cares about renewable energy and are looking at America or Europe don't recognize that there are actual economic opportunities for profit to be made. And we say, many of us use the term doing well by doing good. Yeah. You can make a profit and provide benefits like those you just described, Will, for the communities that we're building these renewable energy projects for. And we just want the financial community to understand and get behind that and fund it, as you said, at an earlier stage.
Okay, no, thank you for that. So I think on the topic of financing, the conclusion is, one, there is enough financing, green financing around. The issue seems to be around matching the right projects with the right kind of financing and getting that through the process in a timely manner. I'm also getting that there is obviously a landscape competitively globally that has changed for some of these renewable energy projects. However, investment in an African renewable energy project is still relatively attractive. That is what I'm getting. I mean, if we're talking about, going back to the topic, there are issues around, okay, if the policy is there, if the financing is there, I think being on the ground as active investors and as active developers, one of the things that has come to light in the past couple of years is the main challenge around grid capacity. I think this is one of the key challenges that's coming up around deploying renewable energy. So there are two issues with renewable energy, I think, as you deploy more of them. One is around the intermittency issue. So that's a really big issue that I think people need to solve for. Both hydro and gas power plants have been, discussed to try and help with that. But what are some of your thoughts, guys, on how we tackle these two challenges? As you deploy more renewables, you need to think about, how do I deal with the fact that when there's no sun, there's no electricity? How do I deal with the fact that the grid can take all this electricity that I'm pushing into it? How do we make sure that both of those things keep up? This is open to anybody. Yeah.
All right, well, I guess I'm a big fan of resource diversity. I think, in East Africa, we're blessed with a lot of geothermal resource, so that's helpful. That's baseload renewable. That's very helpful. But I think everywhere around Africa and generally around the world, there's different resources in different geographies. So I think we have to take a close look at the market or the region and decide what's available. Let's use what's available, right? So there's biomass, there's wind, solar, obviously geothermal, hydro. You can use a mix of those resources and achieve a baseload supply for the market. That's my firm belief, and I think we just have to wrap our head around that and build a grid for that kind of system. Let's let go of fossil fuels. Let's get rid of it. It's time to go. It's time to focus on renewable only for the future. That's my firm belief. So, and by the way, I'm a geologist, but I've never worked in oil and gas, and I've never worked in mining. So I'm a geologist because I love the earth. So that's why we need to do renewables, and I think the grid can be built for that. I've also been involved in transmission development where we had to justify, because we were building a transmission line in New York State, and we had to justify building that line, but 1,000 megawatt transmission line and trying to get to 100% utilization. How can we get close to 100% utilization when we want to focus on renewable energy? Well, it's doable. So we did wind, solar, hydro, battery storage on the supply side, on the demand side, and there's also some curtailment because we needed to do 3,000 megawatts of wind and solar to fill the line because they're intermittent. So there's some curtailment that happens as a result. That curtailment can go to battery storage, and it can also go to people that are developing green hydrogen. They want to buy your curtailed electricity for a lower cost. So there's a lot of innovation around that, and I think that innovation is possible in any market, especially in Africa.
Okay. No, I think, no, that's really good. I'm conscious of time. I did hear the bell a little bit, so I'm going to take one more question to the panel, and then we'll open up to the floor. Just quickly, another big issue that comes up when you're talking about renewables, especially in an African context, is the energy of just. Is the renewable energy transition just? Will it leave some behind? What are the skill sets on the continent? And how do we make sure that people are efficiently equipped to have the skill sets that will make them employable in a energy transition? And Christoph, I know you guys are working on a couple of initiatives in this field. Do you want to maybe just touch on that? How do we make sure that people are skilled in this and the just energy transition is just?
I'm happy to answer that. Just very briefly, let's focus on the renewable energies and the financing side in this case. Why is it always that international banks or DFIs come in, do the due diligence and make the deal? Why don't African banks do that? That's the question we asked ourselves, because there are a lot of African banks that have grown to a size and have grown to a level of expertise where this should be possible, to do all these assessments internally by themselves, maybe have a syndicated deal with a foreign institution, but first of all, do it themselves. So our approach as part of the GET.invest program in total, it's a small subcomponent right now, is to strengthen the domestic supply of financing and to increase, most importantly, the local currency investment, because a lot of projects face challenges because they are such a long-term. Loan agreement is 10, 15, 20 years. You need to hedge if you do the financing in euro or dollars. Hedging is extremely expensive because there's so many uncertainties. So why not do it in a local currency? Because the revenues come in local currency, so why not repay the debt or pay dividends in the local currency as well? We identified this as a potential for growth, and we just earlier this year we concluded a pilot in Rwanda and Mozambique where we cooperated with three local banks in each country where we provided coaching by our experts, team of advisors, where we worked on real cases, not just showcases that are made up, but real cases under confidentiality, of course, where we developed together with the banks tools they can use internally for assessing risks, for evaluating projects, but also tools to analyze the existing client portfolio in order to identify potential for new loan products or equity products in the renewable energy sphere. So this pilot has been concluded, and we will grow that into other countries in Africa as well, where we will cooperate with a few dedicated banks that really want to grow into that sector and do the work themselves. So acquisition of the project, structuring of the project, financing in local currency, monitoring and repayment, the full project cycle. That's one of the things we identified as very useful and a very good solution locally. So that's not always the solution comes from the outside. We want the solution to come from the inside, out of Africa.
All right, no, thank you so much. I think that was the bell. Thank you so much for my amazing panel. I mean, I think when we read the topic, we knew there was a lot to unpack this morning. I think we've just touched the tip of the iceberg. There's so much more to discuss. We'll be stepping down, and you can approach all of us for some questions. We didn't have time to take any, but we're happy to take some afterwards. I think in conclusion, we know that there are projects, there's a pipeline of projects that are there in Africa. We know that the resources are there. And we also now know that the financing is there, and really it's just implementation that seems to be the issue. There's some work to be done on regulatory frameworks with governments, and there's some issue in matching the right projects to the right financing. But overall, I think the green Africa story has been positive for the longest decade, and it continues to be so. And so, yeah, we're happy to take questions after this. Thank you so much.
Thank you.
Thank you.